And welcome. My name is Nigel Lewis and I'm a property journalist, and I'm here today to talk to Eddie Hooker, who is the Chief Executive of the HFIS Group, and we are going to chew the fat on some of the main topics facing the property industry and landlords today. So, there are banks out there, Revolut's one of them, but there are many others who are called electronic money institutions, and they are not banks. Why is that a problem for letting agents?
Let's go right the way back. I think this is where the problem starts and maybe where the problem finishes. Client money protection. So for landlords and tenants out there who are listening or watching this, when you hand your deposit or you hand your rent to a letting agent, they have what's called by law in England, but strongly recommended in Scotland, and I think it's still law in Wales, but certainly in England, they hold your money, yeah, so therefore they need a thing called client money protection insurance. Yeah, so in the event of that letting agent running off with the money
or going bust,
instead of the tenant or landlord having to bang on the door of the letting agent, if they can find him or her, they can go to a scheme and say, my letting agent's gone bust, I've lost my money, can you recompense me? So that's the basics of client money protection. One of the rules of client money protection is that letting agents who are members of those schemes, because of course you don't need to be a member of a scheme if you don't hold money, because landlords and agents can actually collect money between them even if a letting agent is involved. But if you are holding money as a letting agent,
actual cash in
a bank, you need client money protection. One of the rules, as I said, is that in order to become a member, you need to hold that money in a bank or building society.
Right.
Yeah. So that's the premise of it. Yeah.
And that rule was made at a time when Revolut and all the other type of things didn't exist, right?
Well, they existed, but they were very early days, and the legislation didn't take into consideration innovation going forward. Yeah, so client money protection schemes check that is it a proper bank? Yeah, and the definition within the legislation, it's very loose, but it mentions the word bank or building society. And the reason it does that is that there is a thing called the Financial Services Compensation Scheme, the FSCS, which in the event of a bank going bust, there is a government fund, for want of a better terminology, that will pay that money back. I think you can get up to £80,000 back if your bank goes bust. Yeah, and currently only registered and regulated banks and building societies have that FSCS protection. Okay, an electronic money institution, is not a bank or a building society
in that way.
It doesn't have the FSCS.
But to the average punter, it looks like a bank. It has an account, it has a card.
It's regulated by the Financial Conduct Authority, but it is not a bank. Now the problem is not the cause of the letting agent or the EMI, can we call them an EMI, or client money schemes. It is the definition of what is a bank and a building society, and effectively the legislation hasn't really caught up. In fact, you could argue that in certain circumstances money held in an EMI is actually safer than in a bank, because it is regulated and it has to have it's audited all the time. It has to have at least, if not more, money that it holds in security. So where the problem lies is in the definition of the legislation and the challenge to that legislation or that definition. And what client money protection schemes are saying is, hang on a minute, right, there's 5 of us organisations out there. We all need to be working in the same way. There's no point Client Money Protect, which is my client money protection scheme, doing one thing, and then Property Mark, who've got another scheme, doing another, and Ricks, who have got a client money scheme, doing another thing. That's not fair on the tenant. The tenant doesn't choose the letting agent.
No.
The tenant chooses the property. It just happens to be let by a letting agent. The landlord and tenant don't really understand what is property mark, what is RICS, what is safe agent. They don't look at that. They look at, I want my property let and I want to let a property. So they hand the money over thinking, there's client money protection for all these letting agents, and client money protection is generic. It's the same thing wherever you go, but it's not. And that's the important thing. If I start making a decision to accept EMIs, but property mark don't, we're going to end up in a real problem where the tenant will say, so what you're saying is, Eddie, because I've come to you, I've got more protection, or because I've gone to property mark, I haven't. Well, I want to go to I want to let my property with someone that's with your scheme.
Well, they'll never find that out until it goes disappear with the
goes
money.
Belly up. So, and I think another problem on that is the transparency. So do letting agents explain to landlords and tenants when they're taking their money that actually we're not holding this money in a bank per se, we're holding it with an electronic money institute called Revolut, or with PayPal, a PayProp, or with Let's Pay, and all of the others that are going to start creeping out the door. So I think it's a bit of a question where I unfortunately can't give you the exact answer, because what I can do is give you the background, but I would be saying to letting agents,
don't use these accounts.
I'm not going to go that far,
okay,
actually, because I don't think that's the right thing to do in case I get sued when I'm wrong. What I'm actually saying is I think you need to ask questions.
So there's transparency and people realise what's going on,
and I think
they can make a choice.
You need to explain in your terms of business to your clients, your landlords and tenants. I think you need to have more transparency, that actually it's not you controlling the bank account, it's a third party. And that's where I would like to see, and I'd like some consistency around all of the schemes, that's the approach, and really ultimately for the government to come back and say, well, that's what we mean by the definition of a bank.
So either change the legislation to redefine what a bank is.
And please, letting agents who are listening and watching, double check with your scheme. If you're using us, Property Mark, RICS, Safe Agent, Ucala, whoever it happens to be, the scheme that the letting agent is choosing, that when it comes to a problem, that if you're using an EMI, they are aware of it, because it could turn out that actually in the event of a claim, your landlords and tenants could lose out.
So are you aware, has there been a claim yet? Or is this just all us talking about potential in the future, but there hasn't actually been a case yet?
No, there's never been an EMI. We have had experience of third-party holders of client money, third-party, not the letting agent, but that have gone bust.
Right.
But they are not EMI schemes. They were fraudulent schemes, as you can imagine. But there hasn't been, but I think everybody is just looking at risk going forward. And as things innovate, these people have innovated, these electronic money schemes have come along mainly because UK banks don't like issuing client accounts.
No.
So actually, there's it's not necessarily their fault.
No.
It's a bigger picture we all need to deal with. But you're going to see a lot more in the news going forward about what is an electronic money institution and what sectors does it actually work in, and how does it work with the legislation in those particular sectors.
So the last point really is that this will be accelerated at some point if a letting agent or whoever is holding the deposit was using an EMI and they either go bust or disappear.
Absolutely.
Then everyone's going to be going, well, hang on,
where's the money?
Okay.
And that's what we need to be careful of.